Like, I guess my bottom line on the Fed is they always get it wrong. Their timing's always kind of off. And now they're talking about a rate cut in September. A lot of people thought they needed to do a rate cut a while back because the economy seems to be slowing. The danger, of course, with that rate cut is that you've already got all this inflation. I mean, granted, they're saying, oh, it's 2.9%. It's the lowest it's been since 2021. I mean, I was looking still at the chart. Like, it's massive compared to where it was in 2017. But, you want to be in that sort of sweet spot, maybe 2.5%. That's what the Fed is traditionally looking at. They're getting there, but they're not there yet. So how do you cut rates?
Yeah, I mean, look, but like 10 days ago or so, we were fretting about, we thought the whole economy was about to fall off a cliff. I think it turned out in retrospect, that was really, a lot of that was driven by the unwinding of that Japanese, carry trade with
Right.
the interest rate hikes in
By
the
the
Bank of
way,
Japan.
for the record, that's when I was buying. I have nerves of steel. I also bought in March. When was it? March 2020, when the whole country was shutting down and everybody was freaking out, and CNN thought this was like a plane crash and the market was tanking 2,000. Because to me, when everybody kind of loses their, that's when you go in for longer term, of course. But continue your thoughts. So it was the Japanese carry trade.
But it was like the bad jobs report, and then the sort of like simultaneous, the next Monday with the unwind of this Japanese, the yen carry trade, which we wrote about a little bit in a quick take. Now, over the past week, now we're kind of back into kind of soft landing scenario. So interest rates, long-term government bond yields, the 10-year treasury yield, that's like, now we're back to like 3.8, 3.9. So it's down quite a bit from a month or two ago, or, I guess end of April was the peak. Look, I think people are feeling pretty good at the moment about the inflation data and that it's coming down, but we'll see, how, no one's really gotten this right. And, as the dollar kind of softens against other major currencies, like the yen got really weak and now it's strengthening again because Japan's raising rates. So that's propped up the dollar, like, we've, and sort of the cost of imports. But, that
I know,
can
I
start
was just in
feeding.
Europe, as you know, and the viewers know, because I was there for some 3 weeks, which was interesting with the kids.
Well, I was relieved you
My
weren't,
husband was like, okay, I'm only doing one of these weeks with you on. So I was bravely, traipsing through Europe with the 3 kids. What?
I thought the EU thought police may have detained you, or.
I know, I was getting worried. I got to be careful, right? I was broadcasting from the EU. Anyway, they have no First Amendment over there. But what I noticed was it was fantastic. It was like my first time really feeling like my dollar was strong, but the ECB had just cut again when I was over there. And, Donald Trump talks about a strong dollar policy. Everybody kind of talks about a strong dollar policy. We want to have that. Simultaneously, you want your dollar not too crazy, right? Because you want your global companies that are based here in the U.S. to be able to sell internationally. But it just felt really good, right? You could go in and get a cappuccino for, I call it $1.36, but that's not perfect because it's like $1.10 to the euro right now. So it's a little bit more than that, but it's like 1.36, and the kids would automatically translate it, the euros, into dollars. And it was easy for a change as opposed to going, oh my gosh, it's like twice as much, or, 50% more. Yeah. I can remember like always having to double everything in pounds at one point because the British pound was so much more than dollars.
And a lot of that has had to do with high interest rates. U.S. interest rates have been very high. And like we saw with the yen carry trade, in Japan, interest rates are like zero. And that led to a lot of, people were borrowing in yen and investing in dollars. And that led to yen depreciation and, so in other currencies as well. So, that's part of the reason inflation is coming down, because the dollar has been so strong due to interest rates. But if now U.S. interest rates are coming down, that's going to remove that, that benefit, right? And then maybe, we get back towards a more inflationary trajectory.